Question 1. Which of the following factors is NOT typically considered during the underwriting process for long-term care insurance in New Hampshire? A. Age of the applicant. B. Family history of chronic illnesses. C. Marital status. D. Current health status. Answer: C. Marital status. Explanation: the underwriting process for long-term care insurance primarily evaluates the applicant's health status, age, and family history of chronic illnesses to assess risk and determine premiums. While marital status may influence some aspects of coverage options or premiums in certain situations, it is not a standard factor in underwriting assessments. The New Hampshire Department of Insurance requires insurers to utilize a consistent method for evaluating health risks, focusing on more objective criteria like health history and current medical conditions. Question 2. Mr. Thompson is evaluating his long-term care insurance policy options and is considering the implications of choosing an inflation protection rider. He is currently 60 years old and wishes to maintain his purchasing power as healthcare costs rise. What is the primary benefit of including an inflation protection rider in his policy? A. It guarantees that premiums will not increase over time. B. It increases the daily benefit amount automatically to keep pace with inflation. C. It allows for the elimination period to be waived if he requires care. D. It provides coverage for services not typically included in standard policies. Answer: B. It increases the daily benefit amount automatically to keep pace with inflation. Explanation: an inflation protection rider is designed to adjust the benefit amounts in a long-term care insurance policy according to inflation rates, ensuring that the policyholder's purchasing power is not eroded over time. This is particularly crucial given the rising costs of healthcare services. It does not guarantee that premiums will not increase. Option A. Waive the elimination period. Option C. Or provide coverage for non-standard services. Option D. Thus, for someone like Mr. Thompson, an inflation protection rider is a valuable addition to help mitigate future financial risks associated with long-term care. Question 3. Scenario-based. Mrs. Johnson has recently applied for long-term care insurance. During the application process, she disclosed that she has been diagnosed with early-stage Alzheimer's disease. After reviewing her application, the insurance company decides to deny her coverage. What should Mrs. Johnson do next according to New Hampshire regulations? A. Accept the denial and seek alternative funding options. B. File a complaint with the New Hampshire Department of Insurance regarding the decision. C. Reapply for coverage with a different insurance provider immediately. D. Appeal the decision with the same insurance company by providing additional medical documentation. Answer: D. Appeal the decision with the same insurance company by providing additional medical documentation. Explanation: in New Hampshire, if an insurance company denies coverage based on health status, applicants have the right to appeal the decision. This involves providing additional medical documentation that may support the case for coverage. It is crucial for Mrs. Johnson to utilize the appeals process as defined under New Hampshire insurance regulations, which encourage transparency and fairness in the underwriting process. Options and C are not proactive steps toward resolving the issue and while filing a complaint. Option B is an option. The initial and most effective response is to appeal directly to the insurer. This approach allows Mrs. Johnson to present any additional information or clarifications about her condition, potentially leading to a reversal of the denial. Question 4. In New Hampshire, which of the following is a requirement for long-term care insurance policies regarding the free look period? A. Policies must offer a free look period of at least 10 days. B. The free look period is optional and at the discretion of the insurer. C. The free look period must be at least 30 days for all policies. D. Insurers must offer a free look period of at least 60 days for policies sold to individuals over 65. Answer A. Policies must offer a free look period of at least 10 days. Explanation: New Hampshire regulations mandate that long-term care insurance policies include a free look period of a minimum of 10 days. This allows policyholders to review the policy details and cancel it for a full refund if they are unsatisfied. The provision is designed to protect consumers and ensure they have the opportunity to understand their coverage fully. Options B, C, and D are incorrect as they misrepresent the requirements set by the state for the free look period. Question 5. What is the primary purpose of the non-forfeiture option in long-term care insurance policies in New Hampshire? A. To provide a full refund of premiums upon policy cancellation. B. To ensure that the policyholder retains some benefits if they stop paying premiums. C. To prevent insurers from increasing premiums after the policy is issued. D. To offer a conversion option to a life insurance policy without additional underwriting. Answer: B. To ensure that the policyholder retains some benefits if they stop paying premiums. Explanation: the non-forfeiture option is a critical component of long-term care insurance policies that allows policyholders to retain some benefits even if they stop paying premiums after a certain period. This provision protects consumers from losing all their investment in the policy. Options A, C, and D do not accurately describe the purpose of non-forfeiture options, as they focus on refunding premiums or premium increases, which are unrelated to the concept of non-forfeiture. Question 6. Mr. Lee is a 65-year-old applying for long-term care insurance. During the underwriting process, the insurer conducts a health assessment and identifies a family history of heart disease. How might this information impact Mr. Lee's insurance application? A. He will be automatically denied coverage due to his age. B. His premium may be higher due to increased perceived risk. C. The insurer must offer him coverage regardless of his health history. D. His coverage options will be expanded to include additional benefits. Answer: B. His premium may be higher due to increased perceived risk. Explanation: family history of chronic illnesses such as heart disease can be a significant factor in underwriting decisions, as it indicates a higher risk for the insurer. Therefore, Mr. Lee may face higher premiums based on the increased perceived risk associated with his family health history. Options A and C are incorrect as they do not consider the proper underwriting procedures, and option D is misleading as a higher risk typically does not lead to expanded benefits but rather increased premiums or limited options. Question 7. Which of the following statements about the claims process for long-term care insurance in New Hampshire is true? A. Claim forms can only be submitted online through the insurer's portal. B. The insurer is required to make a claims decision within 30 days of receiving all necessary documentation. C. Policyholders can expect a claims decision to be made within 10 days for all claims submitted. D. Once a claim is filed, the policyholder cannot appeal a denial decision. Answer: B. The insurer is required to make a claims decision within 30 days of receiving all necessary documentation. Explanation: according to New Hampshire insurance regulations, insurers must evaluate claims and provide a decision within 30 days after receiving the required documentation. This timeline ensures timely processing and response to policyholders. Option A is incorrect because claim forms can be submitted in various ways, not just online. Option C is misleading as the 10-day requirement is not accurate for all claims, and option D is incorrect. The policyholders have the right to appeal a denial. Question 8. Mrs. Garcia is considering purchasing a long-term care insurance policy with a significant elimination period to reduce her premium costs. Which of the following statements about elimination periods is accurate? A. A longer elimination period generally results in higher premiums. B. The elimination period is the time frame after a claim is filed before benefits begin. C. The elimination period can be waived if the policyholder has a pre-existing condition. D. Shorter elimination periods are typically available only to younger applicants. Answer: B. The elimination period is the time frame after a claim is filed before benefits begin. Explanation: the elimination period refers to the time an insured must wait after a claim is made before benefits are paid out, which allows policyholders to reduce their premium costs by selecting a longer elimination period. A longer elimination period typically results in lower premiums, not higher as stated in option A. Options C and D are inaccurate. Elimination periods are not waived for pre-existing conditions, nor are shorter periods restricted to younger applicants. Question 9. An insurance company offering long-term care insurance in New Hampshire has a policy that includes a rider for coverage of Alzheimer's disease. What is the significance of such a rider in terms of policy coverage? A. It guarantees full benefits for all forms of dementia without exclusions. B. It may limit the benefits based on the severity of the condition. C. It provides coverage specifically for care received in nursing homes only. D. It eliminates the requirement for medical assessments when filing a claim. Answer: B. It may limit the benefits based on the severity of the condition. Explanation: a rider for Alzheimer's disease can provide specific coverage related to the treatment and care of this condition. However, such riders often include limitations based on the severity of the illness, impacting the benefits paid. Option is incorrect as riders do not guarantee full benefits without exclusions. Option C is misleading, as riders typically provide coverage for various care settings, not just nursing homes. Option D is also incorrect. Medical assessments are still usually required when filing claims. Question 10. When evaluating the financial aspects of long-term care insurance, what is the primary factor that can affect the cost of care? A. The applicant's marital status. B. The geographic location of the applicant. C. The applicant's occupation. D. The type of policy chosen by the applicant. Answer: B. The geographic location of the applicant. Explanation: the cost of care varies significantly based on geographic location, as different areas have different costs for healthcare services. Factors such as local demand for long-term care services and regional healthcare costs contribute to this variance. While marital status, occupation, and policy type can influence premiums, they do not directly affect the fundamental cost of care services as location does. Question 11. A long-term care insurance policyholder has a daily benefit amount of $150 and an elimination period of 90 days. If she requires care for 120 days, how much will the insurance company pay in total benefits? A. $18,000. B. $13,500. C. $7,500. D. $4,500. Answer: B. $13,500. Explanation: to calculate the total benefits paid, first determine the number of days after the elimination period. Total care equals 120 days. Elimination P equals 90 days. Benefit payout equals all care days. Elimination P equals 120. I equals 30 days. Now multiply the payout days by the daily benefit amount. Total N equals in a fee payout days x daily benefit amount. Total benefit equals 30 x 150 equals $4,500. However, since the elimination period does not get paid out, the insurance company will pay for only the remaining 30 days of care at $150 per day. Thus, the total benefits paid equals $4,500. Question 12. Which of the following statements accurately reflects consumer protections in New Hampshire long-term care insurance policies? A. Policyholders can only cancel their policy within the first 30 days after issuance. B. Insurers are required to provide a clear explanation of policy benefits and limitations upon purchase. C. Policyholders are not entitled to any benefits if they develop a condition within the first 2 years of the policy. D. The insurer can change the terms of the policy at any time without notice. Answer: B. Insurers are required to provide a clear explanation of policy benefits and limitations upon purchase. Explanation: New Hampshire regulations require insurers to provide clear, understandable information regarding the benefits, limitations, and exclusions of long-term care insurance policies to ensure consumers can make informed decisions. Option is misleading. While there is a free look period, cancellation can occur under various circumstances. Option C is incorrect because developing a condition does not automatically void coverage. Option D is false, as insurers must adhere to the policy terms and conditions that were agreed upon when the policy was issued. Question 13. What is the primary purpose of the elimination period in a long-term care insurance policy? A. To allow the insurer time to assess the policyholder's health status. B. To reduce the overall premium cost for the policyholder. C. To provide a waiting period before benefits become payable after a claim is filed. D. To waive premium payments if the policyholder enters a nursing home. Answer: C. To provide a waiting period before benefits become payable after a claim is filed. Explanation: the elimination period serves as a waiting period during which the policyholder must pay for care out of pocket before benefits begin. This design helps to lower premiums as it reduces the insurer's risk. Option is incorrect, as the insurer does not assess health status during this time. Option D is misleading. While certain provisions may allow for waiver of premiums in specific situations, the elimination period is distinct from that provision. Question 14. During an underwriting review, which of the following would likely lead to a higher premium for a long-term care insurance policy? A. A history of regular exercise and a healthy diet. B. A family history of diabetes and heart disease. C. A strong credit score and stable employment. D. The applicant is under 50 years old. Answer: B. A family history of diabetes and heart disease. Explanation: a family history of chronic conditions such as diabetes and heart disease indicates a higher risk of developing similar conditions, which can lead to higher premiums. Option A reflects low risk, while option C is unrelated to health risk assessment in underwriting. Option D is also incorrect. It being under 50 typically results in low premiums due to lower associated health risks. Question 15. In which of the following situations would a long-term care insurance policy, typically NOT, provide benefits? A. The policyholder is diagnosed with a chronic illness after the policy's effective date. B. The policyholder requires care in a nursing home but has not met the elimination period. C. The policyholder chooses to receive care from an unlicensed home care provider. D. The policyholder has a pre-existing condition that was disclosed at application. Answer: B. The policyholder requires care in a nursing home but has not met the elimination period. Explanation: if a policyholder requires care in a nursing home before the elimination period is satisfied, the insurer will not pay benefits until the period is met. Option A is incorrect, as the policy would cover new conditions arising after the effective date. Option C could lead to coverage denial, but it depends on the specifics of the policy provisions regarding licensed providers. Option D is also incorrect. As long as the pre-existing condition was disclosed, the policy will cover care for other conditions that arise. Question 16. What is the role of inflation protection in long-term care insurance policies, and how does it benefit policyholders? A. It guarantees the premiums will not increase over time. B. It allows for automatic increases in benefit amounts to keep pace with rising care costs. C. It provides a cash benefit for long-term care expenses without a claims process. D. It ensures that coverage remains in effect even if premiums are not paid. Answer: B. It allows for automatic increases in benefit amounts to keep pace with rising care costs. Explanation: inflation protection is a crucial rider in long-term care insurance policies that helps ensure that the daily benefit amounts increase over time, thereby maintaining the policyholder's purchasing power as healthcare costs rise. Option is incorrect. Inflation protection does not address premium rates. Option C is misleading, as it implies cash benefits without a claims process, which is not the case. Option D is also incorrect. A premium payment is still required to keep coverage active. Question 17. Which of the following is a potential drawback of a long-term care insurance policy with a high daily benefit amount? A. Increased risk of policy denial based on pre-existing conditions. B. Higher premium costs that may not be sustainable in the long term. C. Limited availability of services covered by the policy. D. The inability to receive care from in-home providers. Answer: B. Higher premium costs that may not be sustainable in the long term. Explanation: while a high daily benefit amount can provide significant financial support for long-term care, it generally results in higher premiums which may become burdensome for policyholders over time. Option A is misleading, as denial is based on underwriting criteria rather than benefit amounts. Option C is incorrect, as higher benefit amounts do not inherently limit service availability. Option D is false, as most policies allow for in-home care under certain conditions. Question 18. If a long-term care insurance policy has a non-duplication of benefits clause, what does this imply for the policyholder? A. The policyholder can receive benefits from multiple insurers for the same care. B. The policyholder will receive benefits only after exhausting coverage from other sources. C. The policyholder's benefits will be doubled if they have multiple policies. D. The policyholder can choose which policy to draw benefits from first. Answer: B. The policyholder will receive benefits only after exhausting coverage from other sources. Explanation: a non-duplication of benefits clause means that if a policyholder has multiple insurance policies, they must first exhaust benefits from other sources before the long-term care insurance policy will pay. This is designed to prevent overinsurance and limit payouts. Option A is incorrect, as it implies concurrent benefits, which the clause specifically prevents. Option C is misleading, as it does not provide for doubling benefits. Option D is incorrect, because the terms dictate which policy benefits must be exhausted first. Question 19. Which of the following statements about the claims review process for long-term care insurance policies in New Hampshire is accurate? A. Claims must be approved within 7 days of submission. B. The insurer must provide written notice of the claims decision within 30 days. C. The claims review process can be extended indefinitely at the insurer's discretion. D. Policyholders can only contest a claim denial through a legal process. Answer: B. The insurer must provide written notice of the claim's decision within 30 days. Explanation: New Hampshire regulations require insurers to notify policyholders of the claim's decision within 30 days of receiving the necessary documentation. Option is incorrect as the timeline is longer. Option C is misleading, and while there can be extensions under certain circumstances, insurers cannot indefinitely delay claims decisions. Option D is incorrect because policyholders can also appeal through the insurer's internal appeal process. Question 20. Mr. and Mrs. Enams are considering a long-term care insurance policy with inflation protection. They are currently 58 and 56 years old, respectively. What should they be aware of regarding the impact of inflation on their future care needs? A. Inflation is unlikely to affect the cost of long-term care significantly over the next 10 years. B. Healthcare costs typically increase at a rate that outpaces general inflation. C. Long-term care insurance policies with inflation protection do not account for increases in care costs. D. They can wait until they are older to add inflation protection to their policy without penalty. Answer: B. Healthcare costs typically increase at a rate that outpaces general inflation. Explanation: It is essential for Mr. and Mrs. Enams to understand that healthcare costs generally rise faster than standard inflation rates, meaning that having inflation protection in their long-term care insurance policy is critical to ensure their benefits maintain purchasing power over time. The average increase in long-term care costs has historically exceeded standard inflation, often by a significant margin. Without inflation protection, their daily benefit amount could become inadequate as care costs rise, potentially leaving them with substantial out-of-pocket expenses in the future. Option A is incorrect because historically long-term care costs have consistently increased, and ignoring this could lead to a financial shortfall. Option C is misleading. While some policies may have limitations, those with inflation protection specifically address increases in care costs, providing an adjustment mechanism to benefit amounts. Option D is also incorrect. Delaying the addition of inflation protection can lead to higher premiums or even unavailability of such options later due to health changes or underwriting guidelines. Question 21. Which of the following best describes a free look period in long-term care insurance policies? A. A period during which the insurer can change the policy terms without notification. B. A specified time frame during which the policyholder can review the policy and cancel for a full refund. C. A duration before benefits are payable after a claim is filed. D. A time frame allowing for automatic renewal of the policy without premium payment. Answer: B. A specified time frame during which the policyholder can review the policy and cancel for a full refund. Explanation: The free look period allows policyholders a specific number of days, typically 3 days after the policy's issuance, to review the terms and conditions. If they choose to cancel during this period, they are entitled to a full refund of premiums paid. Option A is incorrect as insurers cannot unilaterally change terms during this period. Option C refers to the elimination period, not the free look period. Option D is incorrect as policies generally do not renew automatically without payment. Question 22. In New Hampshire, what is a primary reason insurers include a waiver of premium provision in long-term care insurance policies? A. To eliminate all premium payments after the first year of coverage. B. To allow policyholders to stop paying premiums while receiving benefits due to a covered condition. C. To reduce the overall cost of premiums for policyholders who are under 65. D. To guarantee that premiums will not increase over time. Answer: B. To allow policyholders to stop paying premiums while receiving benefits due to a covered condition. Explanation: A waiver of premium provision allows policyholders who are receiving long-term care benefits due to a qualifying condition to halt premium payments. This protects the policyholder from incurring additional costs while they are already facing substantial care expenses. Option A is misleading, and the waiver typically does not start after the first year. Option C is incorrect, as premium reductions are not limited to those under 65. Option D is false because premiums may still increase, especially in the case of newer policy issuances. Question 23. If a long-term care insurance policy includes a non-forfeiture option, what does this mean for the policyholder? They will receive a full refund of premiums paid if they cancel the policy. B. They can receive some benefits even if they stop paying premiums after a certain period. C. The policy will continue to cover all benefits indefinitely, regardless of premium payments. D. They will be able to transfer the policy to another insurer without penalty. Answer: B. They can receive some benefits even if they stop paying premiums after a certain period. Explanation: a non-forfeiture option ensures that if a policyholder decides to stop paying premiums after a specified duration, they are still entitled to receive some level of benefits, albeit at a reduced amount. This protects the consumer's investment in the policy. Option A is incorrect. While some policies may provide a cash surrender value, this is not the typical function of a non-forfeiture option. Option C is misleading, as non-forfeiture options generally do not provide indefinite coverage without payment. Option D is incorrect. Non-forfeiture does not pertain to transferring policies. Question 24. In the context of underwriting long-term care insurance, which of the following factors is likely to influence the policyholder's premiums the most? A. The policyholder's credit score. B. The policyholder's gender. C. The policyholder's geographic location. D. The policyholder's health status and medical history. Answer: D. The policyholder's health status and medical history. Explanation: underwriting primarily assesses the risk associated with an individual, and health status along with medical history plays a significant role in determining premiums. Factors such as chronic conditions or a history of significant health issues can substantially increase premium costs. Option A is less influential in long-term care insurance than health factors. Option B can have some impact, but it is secondary to health status. Option C can influence premiums, but is not as critical as health-related factors. Question 25. Mrs. Thompson is evaluating two long-term care insurance policies. Policy A offers a benefit period of 5 years, while Policy B offers lifetime coverage. Which of the following considerations should she be aware of? A. Policy A will likely have lower premiums than Policy B. B. Policy B guarantees coverage regardless of health changes. C. Policy A is better for individuals with a history of chronic illness. D. Policy B has higher elimination periods than Policy A. Answer A. Policy A will likely have lower premiums than Policy B. Explanation: policies with shorter benefit periods like Policy A generally have lower premiums compared to those offering lifetime coverage, Policy B, which poses a higher risk to the insurer. Option B is correct. A Policy B does provide more security, but it does not guarantee no premium increases. Option C is misleading, as the choice of policy should depend on the anticipated duration of care rather than solely on illness history. Option D is incorrect, as the elimination period can vary widely between policies and is not inherently linked to the length of the benefit period. Question 26. Which of the following is a common exclusion found in long-term care insurance policies? A. Care provided in a licensed nursing home. B. Care resulting from a pre-existing condition disclosed at the time of application. C. Care resulting from injury sustained due to a motorcycle accident. D. Care received in the home of a family member. Answer: B. Care resulting from a pre-existing condition disclosed at the time of application. Explanation: many long-term care insurance policies contain exclusions for pre-existing conditions that were known at the time of application, meaning claims related to these conditions may not be covered for a specified period, usually 2 years. Option A is incorrect, as care in licensed facilities is typically covered. Option C would generally be covered unless related to a specific exclusion in the policy. Option D is often covered depending on the policy terms, but may have stipulations about care providers. Question 27. In evaluating a long-term care insurance claim, what is typically required of the policyholder during the claims process? A. The policyholder must provide a full medical history from all healthcare providers. B. The policyholder must submit a claim form and supporting documentation of care received. C. The policyholder must obtain approval from the insurer before seeking care. D. The policyholder must wait a minimum of 30 days before filing a claim. Answer: B. The policyholder must submit a claim form and supporting documentation of care received. Explanation: to process a claim, the policyholder must typically provide a completed claim form along with necessary documentation that verifies the type and extent of care received. This documentation could include invoices, care assessments, or physician statements. Option A is incorrect. While a medical history may be necessary, it does not need to be fully disclosed again for each claim. Option C is misleading, as prior approval is not typically required for most care scenarios unless specified. Option D is incorrect. There is no standard waiting period of 30 days for filing claims after care is received. Question 28. Mr. Smith has a long-term care insurance policy with a daily benefit amount of $200 and an inflation protection rider that increases the benefit by 3% annually. If he needs care in 10 years, what will be his daily benefit amount at that time? A. $250. B. $270. C. $268. D. $300. Answer: C. $268. Explanation: to calculate the future daily benefit amount with inflation protection, use the formula future ben equals isn't benefit x1 plus inflation rate number of years. Future ben equals $200 x1 plus 0.310. Future ben equals $200 x 1.3413 and equals $268.78, approximately $268. Thus his daily benefit amount in 10 years will be around $268. Question 29. What is a primary objective of consumer protections in long-term care insurance regulations in New Hampshire? A. To ensure that all policies have the same premium structure. B. To guarantee coverage regardless of the policyholder's age at application. C. To provide transparency regarding policy features, benefits, and limitations. D. To prevent insurers from offering inflation protection riders. Answer: C. To provide transparency regarding policy features, benefits, and limitations. Explanation: consumer protection regulations aim to ensure that policyholders are fully informed about their policies, including the features, benefits, exclusions, and limitations, enabling them to make informed decisions. Option A is incorrect, as policies can have different premium structures. Option B is misleading. While age cannot be a sole factor for denial, it does influence premiums and eligibility. Option D is false, as regulations do not prevent the offering of inflation protection. Question 30. Which of the following factors is considered when assessing a policyholder's risk profile for long-term care insurance? A. The policyholder's preference for in-home care. B. The policyholder's level of education. C. The policyholder's family medical history. D. The policyholder's marital status. Answer: C. The policyholder's family medical history. Explanation: family medical history is a significant factor in determining risk, as it can indicate the likelihood of hereditary conditions that may require long-term care in the future. Option A is relevant but less directly tied to underwriting assessments. Option B, while important in some contexts, typically does not influence insurance risk as significantly as health-related factors. Option D, marital status, may be considered for demographic insights but does not directly impact the assessment of long-term care needs or costs.